Hi there, welcome to Kneppy Invest. Happy New Year. This is my first video of 2024, and let's hope this year is going to be absolutely amazing, not only in our personal lives, but also for our investments. Even though I'm a little bit more bearish than I have been over the past few months, there is reasons behind that. So have a look at my 2024 prediction video. That was not a stock picking video, that was on all assortment of things in our lives, like economy, stocks, and also sporting competitions. Also, what I thought was going to be or is going to be the biggest film of the year. Now, before I reveal your top stock picks for 2024, and you still have time if you are watching this video on January 1st to put in what companies you think are going to perform really well in 2024. In fact, I'll allow you to put in your picks in the comment section of this particular video. Give me at least, or actually no more than 20. I was going to say at least 20, but no more than 20 companies you think will do very well this year. In fact, I have tallied the results so far, and there is one company, it was a bit of a surprise to see this company, there is one company that has been chosen 5 times. So you'll have to wait until January 2nd, 2023 to see what that company is. And maybe if you do reveal your picks in the comment section below, you could add to that 5. Anyway, let's get on to my stock picks for 2024. Now, I did this last year, and one of the criteria I did use in picking these companies was I only chose those companies that I did not own presently. And I was not going to use that criteria for these stock picks, but I have chosen only those companies that I am not a current shareholder. The other thing I want to mention is I'm just using technical analysis in choosing these companies. Now, choosing these companies last year did really well, about 40% gain if you took a portfolio approach of those companies I did choose. And I'm not suggesting you do that at all with these companies, because just because I did really well last year or 2023 doesn't mean I'll do really well with these stock picks for 2024. Now, I'm going to show you just charts. That's all I'm going to show you today. I'll try to explain why I've chosen these individual companies. Originally, I did have about 30 to 35 companies, so I've whittled that down to 20. But I'll also show you 4 or 5 companies that I do currently own that I'm actually quite bullish right now that I decided I won't include in this particular exercise. So let's get stuck into it and look at those 4 or 5 companies that I actually do own right now that I had to exclude from this list. Now, the next 4 companies are just bonus companies that are companies I own and I've decided not to include in these 20 stock picks. So just look at these as bonus picks. And the first company is Bravura. Now, Bravura's share price dropped from $6.20 in 2019 all the way down to a low of 29 cents. Yes, 29 cents in March of 2023. But it does look like the sentiment and the trend in the share price is starting to shift from highly negative to at least positive. So the main reason I am trading Bravura Solutions right now is just based off the chart, based off the market reaction over the past few months. And the company has released a couple of positive announcements. And I think the catalyst moving forward for Bravura is the next positive or negative trading update or positive or negative financial announcement from the company. I think it's going to be very important if it's positive or negative, because if it's positive, this shift in sentiment and the possible change in the trend in the share price will be confirmed by the company. And I think the share price of this company can absolutely take off. I don't think it'll get back up to $6.20 in a hurry. Might take a few years if the positive momentum of in the company keeps on moving forward. But on the flip side, if the next sort of financial announcement from the company is negative, this little rally in the share price over the past, say, 6 months or so since those lows of 29 cents might have come to an end. So that's, I think, the next financial announcement, whether it's a trading update or their financial results in February, is going to be very important for Bravura. But I am positive on this company, just like I'm positive on Zip. And there's, just like Bravura, there's been a significant shift in sentiment and the trend in share price in recent months. And we have seen an increase in volume. So this company is, even though it was one of the most hated companies on the ASX over about a 1 year, 2 year period, I think that sentiment is starting to shift. Increasing interest rates highly negatively affected this company, and the belief that interest rates are going to fall is the reason why the share price of Zip is starting to go higher. Now, we have seen rallies in this company share price before, noticeably back in July 2022, when the share price went from 40 cents to $1.60 in about 1 month. But that sort of rally in the share price was just too quick. And you can see from day to day, the share price just went up higher, sort of like an exponential rise in share price, even though it was on increasing volume. I think just the timing of that rally, just after share price had fallen significantly, and the very fact that it was just too quick, it was always going to fail that rally in July 2022. This rally we're now seeing is a little bit different. It's not quite as bullish. And when I say bullish, I'm talking about a full bagger in 1 month period. I'm still looking at, it's more like a stepwise increase in share price. We see a little bit of a rally, and the share price takes a breather, a little bit of a rally, share price takes a breather. We have seen that happen twice now. So for instance, on the 7th of December, share price went up 25%. And the share price went sideways for 4 or 5 days. And then on the 15th of December, share price rose 18%. And the share price went down a little bit. The share price started to rally again. This is exactly what I want to see when the sentiment in the company started to shift from negative, highly negative, to positive, and the trend is trying to shift from negative to a positive uptrend. And the share price of Zip right now is at about, we'll say about a 10-month high. So I'm actually fairly bullish on Zip, and I think the whole reason the market is more excited about this company right now is the potential of decreasing interest rates. Domino's Pizza is just the chart. And we did see a little bit of breakout in the share price about 2 weeks ago. In fact, that would have been the 14th of December. Share price rose about 4.3% on that particular day. The share price was going sideways for a while. So this is a nice little breakout. And in fact, the last time share price was this high was back in February. So again, just like Zip, about a 10-month high in the share price. So definitely, I think the sentiment in this company is starting to change. And we also saw a really nice rally in the share price back in August when they released their results. Share price on that day rose 11.8%. So it does seem like the things that were plaguing this company back in the start of 2023, why the share price went on a free fall back then, have been solved by management of this company. So that's Domino's Pizza. And then the last company that I do own, but I have not included in this particular list, sort of like a free pick, is Frontier Digital Ventures. I am fairly bullish on this company. Frontier Digital Ventures is in my small cap portfolio, and we have seen a nice little rally in the share price over the past few weeks. And the last time share price was this high was again about 8 or 9 months ago. Now, again, this company releases Appendix 4Cs, and I'm really intrigued to see how this company performed in last quarter. But I definitely think Frontier Digital Ventures will be profitable and operating cash flow and free cash flow positive on a continuing basis soonish. And I think maybe that is why the market is getting a little bit excited about Frontier Digital Ventures right now. It doesn't also hurt that the market is excited about lowering interest rates, which again would help a company like Frontier Digital Ventures. So those are the 4 bonus picks. Now we get into the crux of those companies that I think might do well in 2020. Now, I actually think there is a potential that Bravura Solutions, Zip, might increase by more than 100% in 2024. I don't think Domino's Pizza would. I also think there's potential that Frontier Digital Ventures might also increase by over 100%, particularly if they show the market that they're a sustainable business, that they won't have to do any more capital raisings unless they do an acquisition, that they're free cash flow positive, that sort of thing. So now on to the list of 20 companies that I think would perform well in 2020. First one is Credit Clear. Now, potentially I'm getting a little bit ahead of myself right here. Share price of this company is going sideways. I do like the space this company is in. Let's talk about what this company does according to TradingView. Provides receivables management solution. It provides solutions through its business platforms, Credit Clear, Credit Solutions, and Oakbridge Lawyers. Market cap of this company is about $70 million, if I remember correctly, $75 million. And the other thing I want to point out is the volume since the share price has started to go sideways. So if we actually go or zoom out a little bit more, we can see during 2022 into the start of 2023, volume was fairly light on this company. Volume started to pick up back in late April, early May, near where the share price reached its bottom. And over the past month or so, we're starting to see volume increase. Now, there is some thinking, and I've read this now a couple of times, that volume leads price action. I don't always say that, but sometimes you will see volume starting to increase and then the share price take off. Possibly this is an instance of that, but I probably would prefer to see a breakout for confirmation of that. So this is me just getting a little bit ahead of myself, that I think there is potential that Credit Clear share price can break out, that the chart will move into, the share price will move into an uptrend, and the sentiment in this company will shift from negative to positive. So this is a sort of a more of a high risk pick. What's probably less of a high risk pick is a company called Shape, and this is just based off the chart. We started to see share price move up into an uptrend. Share price has rallied from $1.36 to $1.78. We've also started to see some increase in volume as well. So that's a good sign. Now, this company lists on the ASX back in late 2021. Share price reached a high about $2.30 there. So if the share price can get back up to those highs, that's potential. But this sort of chart, I have been successful in the past in trading this. Looking for the beginning of a new uptrend, or not a new uptrend. In fact, this will be the first uptrend in the share price, and they're just trading that. Worked fairly well with Duratech, Doug Technology, companies like that, where I had no intention for holding those companies for a long time. I did not think those companies had the potential to be high quality companies. They might not still become high quality companies, but the share price of those two companies have been at least a 3 or 4 bagger since the share price broke out. And I'll probably say, if I had to say, when the share price broke out for this company, to look at the previous high. So a few weeks ago, the share price broke out at about $1.69. And the very fact that there's volume increasing gives me good vibes about Shape Australia, that maybe there are some fund managers who are taking notice to this company. The company has a market cap of just less than 150 million, yet is profitable. Price earnings ratio of 14.4, dividend yield of 6.5%. Have I done a video on this? I think I have done a video on this. So it operates an end-to-end service and delivery model across the project lifecycle from new build, fit out. Doesn't tell me what it does. Firm is focused on commercial fit out and refurbishments with select capabilities in new build. It acts as a head contractor on fit out and refurbishment projects across Australia. So have a look at my standalone video on Shape Australia. Pretty sure I did one on that company. Now to a company that took an opportunity to list on the ASX at probably the most perfect time, and then the market didn't realize that this company had significant headwinds during COVID-19, and then those tailwinds, and then those tailwinds were going to turn into significant headwinds, and that's Clean Space. This is another instance of me maybe getting ahead of myself, maybe thinking that the downtrend in the share price has come to an end. So let's have a look at the life of this company on the ASX. Listed on the ASX back in late 2020. In fact, it listed around the time when announcements of vaccines. So that was in October. Share price of this company, Clean Space, got as high as $7.50. $7.50, now it's 33 cents. So this company makes some designs and manufactures, sells workplace respiratory protection equipment for healthcare, industrial, and markets. So straight away, workplace respiratory protection equipment. You can see why this company was beloved by the market for a very brief period back in late 2020, early 2021. Back in March 2021, share price of this company fell 55% in one day, and the share price has been a significant downtrend ever since then. In fact, if we go back, it's really interesting, because if you go back and just look at charts and learn what charts are telling you. So there was a break, a break to the downside. So instead of a breakout to the upside, this was a breakout to the downside on the 2nd of March. You should have sold, if you're holding this company, you should have sold on that date, because then the share price kept on moving down, had the really bad announcement on the 30th of March, and the share price has been a downtrend ever since. Like Zip, there has been some brief rallies, not as impressive as Zip's rally, but all these rallies have fallen short. So the last one was back in February of 2023 when the share price went up 81.8% in one day and then fell back that 81.8% over the next 3 weeks and has actually fallen more since then. But if we just have a look at the chart right now, share price is going sideways. Probably the only negative thing about clean space is the volume. Very weak volume as I said, share price goes sideways. But when the share price did get to about 18 cents back in June, we did see a pickup in volume. You can just see about a month long period where volume was a little bit higher than what we have seen otherwise. And that is telling me that probably that is the bottom of the share price. So that is the limit to where I think clean space could fall from here. So that's sort of the downside, and the upside could be significantly higher from here. So again, this is just me thinking that possibly there will be a breakout in clean space holding share price within the next year. Might be in 9 months of time. In fact, some of the companies that performed well for me in 2023 saw their breakout in the last 2 months of the calendar year. Oranda Mining, this company, I did have my watch list as a breakout, and then I did read a little bit more about this company, and just the management looks fairly impressive. There is sort of a what's the best word? If you were the sort of investor who made your investing decisions based off the management, possibly Oranda could be one of those companies. So, Gone Mining Company, share price has broken out. Share price broke out back in early November at around about 16.5 cents, and current share price is 24. So 50% up from that breakout. Very good to see the share price has been going sideways over the past 3 or so weeks at between about 21.5 and 24 cents. I am bullish on gold in 2024, so there is potential that this company might perform fairly well. Another company that I wish I had made these decisions a few weeks ago, because the share price of Adriatic Metals, which is a silver, not quite a silver producer just yet. I don't think they're in production just yet I think it's Croatia, if I remember correctly. So they look to be a silver producer soonish. I thought they were going to be into production by November, but last time I looked, they had not been in production yet. But in the past, say 2 weeks or so, the share price has just exploded. Share price has gone from $2.80 to $4.01. So something has really interested the market in Adriatic Metals. Not only that, the share price potentially has broken out. It's gone above the last 2 highs we've seen. So there it is, right on that last high. So that last high was around about $4 and now $4.01. So the very fact that this company is going or should be going to production, the very fact that the share price has taken off in the last 2 weeks, something is happening with this company. I think maybe they are now going into production. That's what's got the market excited. So Adriatic Metals, and again, if 2024 is really good for gold, potentially it's going to be even better for silver. So there is that potential that silver could perform better than gold. We sometimes see that when gold rallies, and Adriatic Metals is one of those rare silver companies on the ASX. Now, Clearview Wealth. The main reason I picked this company is just the chart. Share price looks like it's trying to break out, trying to move into an uptrend. Wasn't a long downtrend, maybe a year or so. And if we go back further, there was a lot of interest in this company during last half of 2020 into 2022. Share price went to a high of 84 cents, but it does look like the share price is wanting to move into an uptrend. Sentiment is starting to shift for these type of companies. Market cap is still 361 million. A dividend yield 5.2. Price earnings ratio 22.6. If I had to tell you what this company does in an elevator, like an elevator pitch, I could not tell you. So Clearview is a non-operating holding company which engages in the provision of wealth management, life insurance, and integrated financial services. It operates through the following segments: life insurance, wealth management, and financial advice. So the market is getting interested about these sort of companies. We won't call it fintech. Financial services company? Yeah, financial services I probably call Clearview Wealth. So I probably could give you an elevator pitch just saying financial services anyway. So I've already talked about Zip. Now we go to three companies that I think could really benefit just like Zip in 2024. Companies that have seen fairly significant decreases in the share price because of negative sentiment. And I have heard a few of these companies mentioned in Ausbiz The Core, and most people, most experts hate these companies, absolutely hate these companies. And I think that's the time to get interested in these type of companies, particularly if, yes, we do see interest rates drop. Now, on the flip side, if we do see interest rates drop because we go into a recession, maybe these companies won't benefit as much. So the first company is Hum. Now, Hum has been in a downtrend for a while. A nice rally in the share price back in January of 2023, but that failed. And you could say the share price of Hum has been in a downtrend since 2019. Even post COVID-19 financial panic, there wasn't a nice. There was a V-shaped recovery, but it didn't get back up to 2019 highs. And look at that chart, beautiful downtrend. In fact, a long-term downtrend. I've got this long-term downtrend line here. So if we look at the weekly chart, share price of Hum, which would have been known as Flexi Group back then in 2013, reached a high of $4.60, and it's been a downtrend ever since then. So let's go back to the daily chart. Why have I included Hum in this particular lists? It's just really what's happened in the last few weeks. Some really big volume coming in middle of December, and the share price has started to rally. So I think this is just this shift in sentiment in this particular sector. So they do provide buy now, pay later services. They try to sell that, if I remember correctly, but failed. They also do others. They have cards, stuff like that. Financial services group, which engages in financial products through a network of retailers and brokers. Yes, cards. That's all. Buy now, pay later on cards. That's all I'm going to say. So it's just the chart here, starting to rally, and it's just the volume intrigues me when it comes to Hum Group. And if we just do a little line from the highs we saw back in July, looks like it's broken above that. But again, we saw the share price rally back in late 2022, early 2023. So there's going to be a little bit of resistance moving forward for Hum in that area. But hopefully there'll be enough demand for shares that we can see that resistance zone be neutralized. And you notice when we did see that rally back in late 2022, 2023, just compare the volume then. No volume at all in that rally compared to what we saw or what we have seen the past 2 weeks for Hum. Now on to maybe a controversial pick, or maybe not. Moneyme. Oh, this company, wow, look at the chart for this guy. Oh, geez. So share price of Moneyme has fallen from $2.40 down to 8.3 cents. I'm pretty sure they've done maybe one or two couple raisings. We saw a massive rally in the share price, a one-day rally back in January 2023, so just about a year ago. Share price rose 64.3%, but again, that was not on very big volume, and then that was a one-day rally. That's it. And the share price just fell from there. So I did have a put in a bid for this company at 7.3 cents. It was not hit, so it got very close. In fact, it got to 7.4 cents or something. Now, I think it was 7.2 cents. It got to 7.3 cents and my bid was not hit. I should have just bought some shares in this company, just like I did Zip. I just bought Zip shares without thinking about the share price. But does look interesting right now for Zip, but a lot of negative sentiment in this particular company, as you can see by the share price dropping. Another one of those companies, in fact, I've heard a lot being talked about Moneyme on Ausbiz The Core, and they absolutely hate this company. So there is still that negative sentiment around this company, and you can just see the share price dropping a lot. And so I think this company might struggle at times to go higher, but I'm hoping that as the market sees interest rates starting to fall, or even expectations of interest rates falling, maybe even further, that the share price of this company can rally pretty hard. Markup of only $66 million. Has a PE ratio of 2.11. I'll probably look at that with a bit of grain of salt. The one thing I'd probably prefer to see is some nicer volume coming through. And that's one of the reasons why I was a little bit more hesitant taking a position in Moneyme over Zip was just the volume. The Zip volume was way more impressive than Moneyme, but the share price has still gone up since then. So Moneyme, and last company that is in this sort of sector is Prosper Group. This is probably on the same theme as these other companies. Not well, that's probably lying. So share price has sort of increased over the past few weeks. So share price got as low as about 27 cents in early November, and now at 38 cents. Now, if I was just looking at this chart, I probably would not be interested in Prosper Group, but I think this is more like the longer term play over the next, say, particularly in the last half of 2024, that this could turn around. I actually did compare Moneyme and Prosper Group because they have fairly similar market caps. So I was thinking of maybe eliminating one of these companies and putting another company in because market cap of both these companies is between about 60 and 70 million. Yeah, around about 60 to 70 million. Both companies have fairly similar revenue, that sort of thing. So fairly similar companies. So I thought instead of picking one of these companies and only one of these companies, I'll pick two. So it could be either a really good decision or bad decision, because if this is like a false, what do you call it? A false, I wouldn't say dead cat bounce, because share price has been downtrend for a long time. But if this is a sort of a false rally, then this would not be good. Picking two companies, in fact, three companies within this sector. So maybe I should have just limited to myself to one. Anyway, and if I did have to pick one, I have no idea which company I would pick. So just a little bit of a portfolio approach with these three companies. In fact, I would have picked Zip, and I've already taken a position in Zip. So anyway, now on to a few retail companies. The first one is Dusk. And this is, again, just thinking that this company is really cheap right now. I actually would consider Dusk really cheap. Price earnings ratio 5.8, a dividend yield 10.8. So the market is saying that the profit for this company is going to drop significantly. And even if the profit drops by half, PE ratio of this company is still going to be around 10. And maybe if they drop the dividend by half, dividend yield is still going to be above 5%. So I think there is potential that there is some value in Dusk Group right now at a markup of 63 million. So again, I'm getting ahead of myself that I think the bottom has been reached, and that bottom would have been in June of this year. The share price got as low as 83.5 cents. But I probably would prefer to see a breakout in the share price on some good financial news. And my expectations are that possibly this company could have a good last half of 2024. City Chic is another one in the similar boat where I think there possibly is some value. I think there's more value in Dusk Group than City Chic, but City Chic has a market cap of $128 million. There has been some problems with this company, but the share price has dropped significantly. So share price has dropped from $6.75 to 53.5 cents. So we're talking about a 93% drop in share price over a 2-year period, which is fairly significant. So I think a lot of negative sentiment has driven the share price down well below where it probably should be, probably where fair value is. And we have seen some rallies in the share price before in this company, particularly back in July this year, when the share price went from about 30 cents to 64 cents. So share price doubled in a fairly short period of time. Again, not a lot of volume, and the share price fell back. In fact, reached a new low back in November. That low was about 25 cents. Share price has again doubled in this particular rally. Will history repeat from what we saw in July? Will this be another false rally and the share price falls from here? I think there is potential, but also if sentiment starts to shift in these consumer discretionary companies, possibly the bottom has been reached for City Chic. And I wouldn't be surprised to see a sustainable rally in the share price of this company, particularly, this is probably quite important for not only this company, but many other companies I've chosen, particularly if the company releases positive financial results or positive trading updates. There's also a scenario, because I'm a little bit more bearish, that any sort of trading updates might be negative, and any sort of negative trading updates from a company like City Chic should put an end to any rally. In fact, the share price could drop a significant amount. So a little bit more risk, I think, in City Chic than over Dusk, just because of valuation. But I do think there's valuation or good value grounds for both of those companies. Ador Beauty, not my favorite company. Well, yeah. In fact, most of these companies are not my favorite companies, but this is just a chart. This is just looking at the chart, looking at a bit of a breakout in the share price. There was a attempted takeover bid for this company, if I remember correctly, back in late November, and the management of Ador Beauty said, no way, you're undervaluing this company. So the market got excited about that, and I think that's one of the reasons why the share price of Ador Beauty is breaking out. Share price now $1.40, up from the lows. The lows, again, late, maybe not again, but in October at 70 cents. So share price has doubled from its lows, but we don't know, or we had no idea that was going to be the lows, but this is a potential breakout. Maybe not even say potential. This share price of this company is breaking out. I'd love to see the share price just pull back to, say, about $1.20 and then start to go up from there. A nice, healthy pullback would be really good for Ador Beauty. So this is just me playing the chart. A company I'm not exactly playing the chart, a company I am actually interested in taking more of a longer-term view, a hold, is COSOL Limited. A company I've done a little bit of research on in the past few months, and the share price has taken off the last 4 trading days. Share price has increased from 88 cents to 99 cents in those 4 days. So the market is starting to like this company for some reason. And probably more importantly, if you just draw a line like right there, so share price of this company was struggling to get above about 90 cents, and now it's easily got above 90 cents. And this is another instance where I'd like to see a share price just pull back towards 90 cents and then take off again. So this, even though you could actually argue this is sort of a play on the trade, sort of like a trading play, I probably would prefer to own COSO for the longer term. Market cap 173 million, PE ratio 18.5, dividend yield 2.5%. I do actually like this company for a longer term play. Aries Resources could be a copper play, a good value copper play, even though I'm not the biggest fan of this company and how they have performed over the past few years. I think there is potential to say that the market has priced in all the bad news, and that's probably why the share price found a little bit of support on the last trading day of the year. Share price actually went up 11.5%, which it didn't do that. So this is more of, I think the bottom has been reached for Aries Resources. That could be the worst sentiment, but the worst reasons to include this company in this particular list. But I think there is even an argument to say there might be some value for this company at a share price below 15 cents with a markup of $121.99 million. This company is a copper producer, so that's something else you have to think about. Are you bullish or bearish on copper? I actually know people in both, not both camps, but in bullish camp and a bearish camp. There are people who are extremely bullish on copper. There are some people who believe that bullishness is not well founded. So it's interesting to hear both sides of the story. One might be right, one might be wrong. They could be both right. They could be, could they be both right? No, they could be both wrong and nothing really happens with copper, just goes sideways for the rest of the year. So that's sort of a neutral. So if there's anyone neutral on copper, they might be right. Now, the last 6 companies are chosen from among United States companies listed on either the Nasdaq or the New York Stock Exchange. The first company is a company called BristolMyers Squib. This is a pharmaceutical company. I had a look at what they do produce. I had a closer look at this company about a month ago, when the share price reached its lows late November at about $49, and I did not recognize any of their products. But I brought up what they sell. The company is known for biological and pharmaceutical research, producing the antipsychotic Abilify, which it helps market, and its blood thinners Plavix and Eliquis, as well as cancer drug Opdivo. So I've heard nothing this company produces, but this is a highly successful company. So in the last financial year, they had revenue of $46.2 billion and profit of $6.3 billion. So this is not a small company, and a market cap of $100 billion. So why have I included BristolMyers Squib in this particular video? Why have I chosen it in my top 20 picks for 2024? This is based off the chart, where the share price is right now. And a fair bit of negative sentiment has driven the share price down to an important support zone. That support zone is around about, between $50 and $48. So if you go back through history, this is the weekly chart. Share price of BristolMyers Squib has been going sideways since 2013. So it got to these levels 10 years ago. Now, over the past 10 years, this company has increased its revenue. In fact, in 2018, this company had $22.6 million of revenue. Now it's 46. Profit back then was 4.9. Now it's almost 6.3. PE ratio of this company is 12.9. Dividend yield is 4.7%, which is actually quite impressive for a company listed on the New York Stock Exchange. So I just think at current prices, there might be some value in BristolMyers Squib Club, because whenever the share price gets down to these levels, over the past 10 years, we see the share price rally eventually. So I'm hoping, because the share price has fallen from about $81 to $51 in the past year, this is just a recovery story. Just a recovery story. Now, I don't understand this, particularly the financials of this company, absolutely, but this is just a turnaround story. Unlike Atlassian. In fact, I had to look at the daily chart for this one. This is a breakout story. I did take a position in Snowflake, and I was thinking about taking a trading position in Atlassian. I decided just to hold off because the share price rallied really nicely over about a 3-week period, increasing from about $188, $185, all the way up to $250 in a few weeks. So I thought, oh, there's going to be a little bit of a pullback as we see profit takers come in, and we have started to see that pullback in the last few trading days. Share price is starting to move down. So I want to see the share price of this company get down to $220. If I see the share price of Atlassian get to about $220, I might take a trading position in this company. This is one of those companies that is not profitable, but is a significant growth company. Markup of 61.6 million. When I say significant growth, this company has grown their revenue from 1.2 billion to 3.5 billion over the last 5 years. It's not profitable. So you might say, how can a company with $3.5 billion not be profitable? I'm pretty sure this company is cash flow positive, though. Operating cash flow positive, 868 million. So one of the reasons why companies like this are not profitable yet are operating cash flow positive is because of share-based payments. I think it's a problem in American-based companies. This is my feelings on that. Anyway, this is just a breakout play. Not a potential breakout. I think it has broken out, but I just want to see share price pullback and then the share price take off from there. A potential turnaround story, Disney. Some people hate Disney, that they're woke, or they're woke. I don't care about that. In fact, whenever I hear someone say something's woke, I just ignore them, because I think most people don't even understand what woke means, just based off how they use it. Anyway, this is not me ranting about woke. So this is just a potential turnaround story. So share price has been a downtrend for Disney for quite a while. In fact, I'd say since late 2021. So for about 2 years, share price has been as high as $200 back in start of 2021, now at $90.29. So we are starting to see signs that the downtrend is coming to an end. So nicely rallying the share price on some good volume coming in. I'm pretty sure the company also released some positive financial news on the 9th of November. Share price went up 7% that day. And then even though we saw that nicely rally, share price hasn't really moved down much from there. So if I see the share price get above $96, that would probably confirm to me, or more confirm to me, that I think the end in the downtrend is coming or has come, and maybe uptrend in the share price is on the way. So Disney is on my list. I'll probably have less confidence on Disney than a few of my other picks here, but I think there is potential of a shift in sentiment, in a shift in trend in Walt Disney Company. Another one that is sort of a breakout is Cloudflare. So ticker code NET. This is on the New York Stock Exchange. In fact, BristolMyers is New York Stock Exchange. Atlassian is Nasdaq. Disney is New York Stock Exchange. And Cloudflare is New York Stock Exchange. I'm pretty sure Cloudflare is cybersecurity. I'm just going to back that up. Gauges the provision of cloud-based services to secure website. It offers various products for performing and reliability, video streaming, Cloudflare for developers. Oh, so it's not quite what I thought it was. Okay, so I can just say that even though I might be trading these companies, I don't know what these companies do. Seems like that's the whole point. I'm just looking at the chart, and the chart says that the share price or the downtrend has come to an end. Share price was going sideways, and then the share price is started to go up and broke out a few weeks ago at $76. And this is just like Atlassian. If I see a little bit of a pullback and the share price starting to go up higher, that would be a good sign moving forward for Cloudflare. This company is that's pretty big market cap, 27.9 billion, not quite as much as Atlassian, and really impressive increase in revenue. So revenue has gone from 192 million to almost $1 billion over the past 5 years. Again, not profitable. And is the company cash flow positive? Operating cash flow positive, 123 million. Yeah, so this company is operating cash flow positive. So this is just a trading play, just like Atlassian, fairly similar to Atlassian. In fact, I did choose quite a few New York Stock Exchange and Nasdaq companies, and I had to exclude a few of them. But a lot of these companies have been breaking out or showing signs of breaking out over the past few months. I think Zoom, not quite there yet. Share price of this company has been in downtrend for a long time, for about 2 years, I'd say, since the middle of 2021. Share price reached a high during the COVID-19 financial panic, not panic, but the recovery. Look at that, beautiful. Share price went from $60 to a high of $600, so a 10-bagger over a brief period of time. Now the share price has gone from $600 down to $71.91. And I'm thinking we're starting to see signs the share price is trying to go sideways, consolidate. And what I want to see is, I just put a line there because this line is fairly important. So we just zoom in a bit. So you can see the last two times the share price rallied, it got to about $75 or so. That was back in July, and then again in September, and then that rally subsided, and the share price again hit that price on the 26th of December, and the share price in the last 3 trading days moved off that resistance level. So $75 is very important for Zoom video. So if I see the share price get above $75 on strength, that will be a very important breakout price movement for this company. Started to see an increase in volume over the last few weeks as well during that last rally. In fact, this last rally, share price went from $59 to 75 cents. Now, I'm not sure if the low has been reached. I want to see what happens with the share price over the next few months, but this is me just thinking there is potential that Zoom would be breaking out at some point during 2023. And the last company is Alibaba, a company I have been thinking about taking a position in for about a year, and the share price keeps on dropping. So I started to really follow this company when the share price moved into this downtrend. And this company still has a market cap of $200 billion, but the PE ratio is 10.7. Now, really impressive revenue growth, but revenue did drop in 2022 compared to 2021, just a little bit, and profit was about the same, around about $10 billion. But if you look at quarterly, the revenue of this company in the last 4 quarters, 6.6 billion, 3.5 billion, 5 billion, and then 3.8 billion. So around about $20 billion of profit in the last 4 quarters, hence why PE ratio is 10.7. But the main thing about Alibaba is there is still a fair bit of negative sentiment when it comes to China. There is a lot of geopolitical concerns about companies like Alibaba that one day that Chinese government could nationalize this company. Not sure if that's well founded, but no signs that the share price is moving into an uptrend for Alibaba. So this is possibly just a valuation play. So really good valuation with this company. You are taking a little bit of a risk, but I probably would prefer to see the share price at least trying to break out, sort of like Zoom, or breaking out sort of like Cloudflare and Atlassian, or again showing signs of breaking out just like Disney. So this is probably my lower confidence among the American, not based companies, this is a Chinese based companies, but American listed companies, Alibaba. So is that it? Yeah, that's it. So those are my 20 companies for 2024. Let's hope these companies, or 20 companies, do as well as my 20 and 23 companies who rose 40% as a group. So congratulations to those 30 companies. And let's hope these companies perform even better. I doubt it. I'm going to say right now, I doubt it because I am being a little bit bearish. So if you have any questions about these companies or maybe any other company, you think there should be a company that I should have included in this particular list, love to hear your thoughts. But more importantly, if you haven't provided me with your list of companies for 2024, give me a list of your companies that you do think will perform really well in 2024. Leave those companies in the comment section of this video. You have until the end of January the 1st, midnight, January the 1st, 2024. This is the time of year where you have to get used to saying 2024. The amount of times we're going to make a mistake and say 2023 is going to be quite numerous over the next few months. That's it for this video. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.